going out on April 15th. That does not exist.
But I want to make it really clear that people end up doing they're like, oh, I get this and multiply it by 20%. I'm like, no. It's way more complicated than that. There's a whole thing I have to do to make sure that number, it's not just a quick, dry number. Because a lot of times people will do that and they'll come up with a number. And I'm like, and my number will be way higher. And they were just like, wait, that doesn't make sense. I'm like, because you have to take this into consideration. You have this, you had this cash, you had, there's just so much other stuff you have to do from the financial side of things to tax plan for what that number is going to be. What other gains you had, the sell of all the assets, everything else. Because there's still going to be ordinary income tax for just the rest of it too. For
whatever income you made that year already has to come into play.
Exactly. Right. And then on top of that, any assets because there's still going to be an asset number in there. There's still going to be other stuff in there. There might be non-competes and intangible assets that we haven't even considered. That would be ordinary income tax rates that we have to add on top of that. And so people kind of mistake those two, and they just think they throw a number in there and that's going to be their tax number. And so I think it's really important to tax plan that so we know what that number is and be able to put it aside.